Hello, welcome back to the podcast, everybody. Episode 50, I think, maybe 51, but whatever. To anyone who's new, this is a podcast, so the only thing on the screen is going to be a shifting visual backdrop. Just received the Patreon payment, so thank you to my patrons. If anybody else wants to help support the podcast and the channel and everything, or just continue to allow my further existence, then both PayPal and Patreon links are down in the description below and in the top pinned comment. Now, number of things happened. Gold, for one, broke past its previous price record, which was up around $1,900 per ounce. It went past $2,000 per ounce and was heading up towards $2,100, and it ended up getting up to about $2,070 per ounce. Silver has been rising quickly too, however it is not near its previous price record, at least not yet. Now I did expect gold and silver both to go quite enormously higher than their previous price records during this decade, just in a more staggered long-term fashion. Granted, of course, that was like a general outlook based on the assumption of nothing drastic happening within society, like everything that's happened this year. So why is it suddenly spiking up? Because everybody's been buying it. In fact, actually, that's part of the reason why global gold inventories haven't broken their previous gold in storage record, since gold demand did drop by a fair amount, particularly in jewelry, because unlike silver, gold is still consumed in a huge part to make jewelry. That's still one of its largest demand sources. And obviously, with the big global event that's been going on this year, jewelry demands kind of dropped by a lot, as running out and buying new rings and earrings and bracelets and everything wasn't exactly on many people's top priority list. So if you've been listening to episodes frequently, you know that global demand for jewelry dropped by over a third in the first quarter of the year compared to normal, and by half during the second quarter of this year compared to normal. And that lack of demand, that substantial lack of demand, has had gold inventories building back up, at least up until the last month and a half or 2 months or so, where their increase has been slowing down, despite the demand for gold from jewelry in particular being even lower during the second quarter. And that slowdown of their buildup was from an increased demand of gold coming from investors buying it up, which has obviously been pushing the price up over the course of time. However, investor demand hasn't been enough to actually stop the inventories from building, because the collapse of jewelry demand for gold has just been that large. But it still has kept them from reaching the previous record global gold inventory levels, which were around 40 million ounces in storage many years ago. Presently, as of recording this, they are up at around 36.4 million ounces in storage. The day before this, they'd actually been at 36.5, and over the last day or so, they've fallen back down a little bit. So that's the general overlay of how it's been playing out, and in a similar fashion has kind of been happening to silver as well, with the exception that the reduced silver demand from the collapse of jewelry demand isn't as significant as the percentage reduction in gold demand from the collapse of jewelry sales. Because silver's real big-time sources of consumption are electronics and now also the manufacturing of solar panels. However, silver inventories have not swollen by that enormous of a degree, because again, jewelry is not that grand of a percentage of silver demand anymore. Silver inventories had been down around 300 million ounces or so, not at 300 million, but a little bit above it. And they've been rising up a bit and dropping a bit and rising up a bit and dropping back a bit. Presently, they are in the 330s. The day before recording this, they had gone up to 336 million ounces in storage. And on the day of recording this, they had dropped back down to 335, with silver prices having jumped up to $27 an ounce, and recently, earlier this day, almost climbing up to $30 an ounce. And I do expect, regardless of this whole event, silver in the long term, I did expect anyways, to eventually get up into and over the 70s in terms of dollars per ounce during this decade, as the silver supply deficit continues, or at least it will continue once everything sort of simmers back to normal after all of this, as global silver production from silver mines peaked back in 2015 and has declined by about 8 or 9% since then, while silver demand obviously keeps climbing, at least in the long term. Now with the platinum group metals, their inventories also began climbing when all of this began, because their primary source of demand by between 80 to 90% of their consumption is for the manufacturing of catalytic converters for ground vehicles. And as all of this has played out, new vehicle sales in the midst of all of this have kind of dropped by a significant margin. So the platinum group metal inventories obviously started building up, despite investor demands going up from people buying it up. Now their inventories measure in thousands of ounces, not millions, because they're much rarer. Platinum inventories had been almost down to 150,000 ounces in storage at the start of the year, and over the first 7 months of this year, they have climbed up to over 400,000 at around 410, and with platinum prices presently just over $1,000 per ounce. And palladium inventories, before all this began, had been down at around 29,000 ounces in storage, and now, as of this moment, they are up to 53,500 ounces in storage, while palladium prices climbed up to about $2,300 per ounce, and as of recording this, they had fallen back down to around 2,260. Rhodium is beginning to climb back up a little bit more again, now up to $9,100 per ounce. Now jumping over into petroleum, we have the weekly US numbers and the monthly Canadian numbers. US oil production resumes declining, dropping from 11.1 down to 11 million barrels per day. And US oil consumption took a drop down to 17.9 million barrels per day, so just under 18, with the individual product numbers within that being US gasoline consumption coming in at 8.6 million barrels per day, compared to, under normal circumstances in present day, US gasoline consumption would be between 9 and 10. US diesel fuel consumption presently at about 3.7 million barrels per day. Normally it would be at about 4. US jet fuel consumption coming in at 1.01 million barrels per day for the week, compared to a normal present day average of 1.6 to 2. And US propane consumption for the previous week averaging 786,000 barrels per day equivalent. And since it's the summer and heating demand all across the board is extremely low, most of that propane consumption, when it's down there only in the hundreds of thousands of barrels, is propane that's being used to make propylene to be turned into plastic. And US crude oil inventories declined again by a bit less than last week. Last week they dropped by 10 million barrels. This week they dropped by a bit over 7 million barrels, while oil prices climbed a little bit higher, fluctuating between $41 and $43 per barrel. And global jet fuel consumption continues holding at about 4.7 million barrels per day. And global jet fuel consumption continues holding at about 4.7 million barrels per day, after, again, normal present-day average, especially in summer, would be at or over 7, and just on general average would be around 6. And during the height of all of this, in the midst of April, it had gotten as low as 1.7. And the monthly Canadian numbers, they're staggered data, so it's on a delay. Canadian data is for May. So in May, Canadian gasoline consumption continued recovering and got back up to 536,000 barrels per day, compared to Canada's normal average under regular circumstances, which would be between 800 and 900,000. And Canadian diesel fuel consumption in May averaged 482,000 barrels per day, compared to, under normal circumstances, their diesel fuel consumption would be between 600 and 700. And their jet fuel consumption in May actually dropped compared to April. Normally, Canada's jet fuel consumption in present day is around 100,000 barrels per day, about the same as Australia. But in May, Canadian jet fuel consumption actually continued decreasing and got below 13,000 barrels per day. And Canadian electricity demand in May averaged about 63 gigawatts of active demand at any given hour. That's down from 67 in April and 77 in March, and compares to their normal average in present day, which is, under normal circumstances, usually around 75. And so that's it for this one. So thank you everybody for sticking around and listening. Like the video if you enjoyed, subscribe if you haven't already. Support by any amount through PayPal or Patreon, it doesn't matter. Anything's enormously helpful regardless. And one way or another, no matter what, may God bless you all, and I will see you all around next time.